Alright, good evening ladies and gents. In today's video we're going to be discussing an interview that Arthur Hayes just did with Tom Bilyeu, and also an article that he wrote regarding his thoughts on how Bitcoin will hit 750,000 within the next few years by 2026. And along with that, he predicts that there's going to be the biggest boom in financial markets in history. And he also believes that AI will lead this bubble in financial markets, and gives us a couple of ideas for what coins in the cryptocurrency world could benefit the most from this AI boom. And we'll go through those coins at the end of this video, but I think we just need to lay the groundwork on his macro analysis, which will lead to this AI boom. So the main reason he thinks there's going to be a boom in financial markets is because that the biggest amount of money that has ever been printed, we thought it was COVID, but over the next 3 years, even more money will be printed than what was printed in COVID-19. So let's dive straight into it. So I believe, and I think it's becoming quite clear, that at some point AI will go into its own bubble. Now, we saw the first rumblings of it recently with Nvidia going over $1 trillion market cap. So Nvidia, one company stock that makes chips, has a bigger market cap than the entire cryptocurrency market cap combined. But as I said, I think that's just the very first innings of the potential with AI. But for me, Nvidia just became a little bit overpriced, and actually Arthur Hayes agreed with me. So when Nvidia almost was hitting $500, I actually sold all my Nvidia, put it into Tesla and put it into crypto. So Nvidia probably is a good play over the next coming years. I did a video on AI stocks up there, but nevertheless, it's at all-time highs. Like, the potential returns have been diminished now because it's gone up so much. But are there any opportunities in AI that aren't at all-time highs, that aren't egregiously overvalued, that are perhaps 98% down from their all-time highs? That's potentially where a better opportunity is. So we'll discuss that further on in the video. But the good thing about Nvidia is that they're selling the chips, they're selling the compute power for AI. They're not a AI company. So you're selling the shovels for people digging for gold. Same with Amazon Web Services. They're selling data storage for AI companies, so less risk, but still a good potential upside. However, we want to find these kind of opportunities of people selling the sticks and shovels for people digging for gold, as in AI, that aren't at all-time highs, that aren't egregiously overvalued, that don't have market caps that are double what Tesla's market cap is, with half the revenues and the same growth. So we'll discuss those opportunities at the end of this video, so make sure you stick around. Like I mentioned, Arthur Hayes believes that the most money that has ever been printed will be printed over the next coming 3 years. So let's break down how that happens. So essentially how the fiat system works, how these governments think that they can take on all this debt and be able to pay it off in the future. They kind of use this formula here. So they take on this debt, they invest it in their country, and they hope that the investments that they make in their country will lead to GDP growth. So their population is growing, they're getting more efficient, they're getting more productive, and therefore the GDP will grow, they'll get better taxes, and they'll be able to pay off the interest. But unfortunately for them, at the moment, population growth is pretty much stagnant in all Western countries, if not declining in a lot of them. So the only thing that they can add to create GDP growth is actually to take on more debt. And this is kind of the playbook that Japan has been running for years, so they haven't really been growing. Like, Japan was the second biggest economy in the world in the 70s, I believe, and now it's, barely in the top 10, I think. It's just a slow lead for Japan, and this is kind of the playbook that's probably going to have to happen for a lot of these Western countries, unless there's some massive productivity growth. So what are the drivers that could drive massive productivity growth? Would be some sort of newfound energy. If everyone started using nuclear energy, or, which I believe is possible, like the likes of solar and wind power, particularly solar, people using batteries in solar, drives the cost of energy right down. That would be a massive boost in productivity. But all of this takes time. It's not going to happen in the next 3 years. Like, you can't just build a nuclear reactor in 3 years' time. I think it takes 10 to 20 years. But over the long term, I obviously do believe that productivity will go up. AI is going to help this, make everyone way more efficient, and have way more output, as well as energy prices will actually come down with increased use of solar, wind, and hopefully nuclear. But in the meantime, there aren't any potential catalysts really for productivity growth. Obviously, AI is going to have a major effect in the future, but right now there's not, like, apart from ChatGPT, like, it's going to take time for this to have real productivity gains in the economies. So in the past, America and the Western world always had something that, like, led to huge boosts in productivity. But these are only one-time boosts. Like, they're not perpetually increasing the economy. They're just one-time, help your productivity grow exponentially, and then that's it. Then you have that extra growth, and then you go back to a normal rate of growth. Some examples was the entrance of women into the workforce, double productivity growth overnight. Well, not overnight, but you get what I mean. Obviously, the advancement of the internet led to huge productivity growth. And back in the day, even the invention of railroads and the discovery of, like, using oil for transport and for energy, that was a massive increase in productivity. Hopefully AI will be that increase in the future, but for now, what is the solution? So at the moment, the US government is paying trillions and trillions of dollars in debt every year, and this is because they've raised interest rates. So how are they going to afford to pay off this debt? Is the US government going to reduce its spending by 50%? Tell everyone who had a pension with the government, oh, sorry, we're not going to be able to pay your pension payouts anymore. You're going to have to take a huge haircut. Oh, sorry, you're in military service. Oh, sorry, you are on social welfare. Sorry, we're going to have to cut that massively because we don't have the money to pay that. Is that the most likely scenario? No, of course not. They're going to keep paying their liabilities because otherwise they're not going to get voted in. So the only way they can do that is to take on more debt to pay off the debt they've already taken. But if there's a huge productivity boost, this will reduce the amount of debt they have to take on because they'll actually make some more in taxes. But at the moment, there's not huge productivity boosts. They're in a massive deficit, so they're going to have to fund this deficit by taking on more debt. And who's going to be the buyer of all this debt? So if the US government issue a load of debt and there's, willing participants in China or willing participants in the EU or willing participants in the private sector who would buy up that debt, those government bonds, then no money has been printed because they're getting money from money that's already out in circulation. But now we have to decide, are there actually buyers of US debt at the moment? Are there enough buyers to fund the deficit that the US government will have over the next 3 years? So Arthur Hayes shares this in his article, how much that he estimates different countries will have to issue in bonds, in new bonds over the next 3 years. And in total it comes to $33 trillion of bonds that will have to be issued in the next 3 years. But you might be thinking, oh, but wait, aren't interest rates like 6%? Isn't that like a really good return? Maybe the private sector will buy up these bonds because they're 6, maybe even 7% over the next 3 years. They'll get a really good return on these bonds. So let's lay out some reasons why the private sector and other countries might not be willing to buy these bonds now. Well, we've already seen that China and Japan have stopped rolling over their bonds. So they used to be the biggest buyer of US debt, and now they've kind of stopped because of the trade wars and other varying reasons. Another huge buyer of US government bonds were private banks, and you saw that the private banks who bought bonds over the last few years at 0% interest got absolutely decimated over the last 2 years. So they were buying these bonds at 0% or 1% interest rates, and then interest rates spiked up really high, so the value of their bond plummeted, because who's going to buy a bond that only yields 1% when you can buy a bond that yields 6%? So the value of those bonds plummeted. So then all those banks had to be bailed out because the value of their collateral collapsed massively overnight or over the course of a few months. So are they likely to go buy more US government bonds as the US government or as the Fed keeps saying, yeah, we're going to continue raising interest rates? No, of course they're not going to be so willing to buy US bonds. And where are they even going to get the money from? Lastly, like public people like you and me, are we going to buy the US government bonds? Maybe, but once you realize that the GDP is actually growing at 10%, or there's all these other opportunities that are growing at faster rates than 6% that the US government is offering, you might be a little bit more reluctant. You're actually earning a negative real yield, because at the moment, if you look at the GDP numbers in America, the GDP is growing at 10%, which means you're losing 4% if you're buying US government bonds. So of this $33 trillion of debt that is going to be issued over the next 3 years, who is going to be the buyer of all these bonds? So Arthur Hayes believes that at least 50% of this newly issued debt is going to have to be paid for by the Fed. So potentially up to $15 trillion is going to have to be printed over the next 3 years to actually buy these bonds, because the money that's already out in circulation doesn't want to go into US bonds, so they're going to have to print money to be able to fund the government. In total, the US government printed $5 trillion during the COVID pandemic, but over the next few years, they're going to have to print $7 trillion. So even bigger stimmy check than what was in COVID. So where is all this money going to go to? Of course, it's going to go into any sort of hard assets, real estate. It's going to go into stocks. It's going to go into tech stocks. It's going to go into crypto. But where is the biggest amount of money going to go? The biggest amount of money is going to go into the hottest new thing. And the hottest new thing over the next coming years is there's quite a high likelihood that AI will be one of the hottest things over the next few years. So Arthur says the best opportunity for AI are in opportunities that are, number one, not at all-time highs and quite probably overvalued. Two, that are highly liquid, because we don't know exactly when this AI boom is going to happen, when this AI bubble is going to happen. And the last thing that you want to happen is that there's a huge AI bubble, but you're in vested tokens that you can't sell for 3 more years or something. You want to be liquid so you can sell during the financial bubble in AI. The other thing he says is you don't want to be investing in or speculating on individual AI companies, because, say for example, you don't want to be investing into a company that's just plugged into ChatGPT using their AI, because basically your code can easily be copied over the next few years. So 99% of AI companies that don't build their own AI trained data set can easily be copied. Like, you can just use ChatGPT, say, oh, I want to use ChatGPT to create a business that does this, and it will write the code for you. So most of those companies, like, it's going to be very hard to win, or ChatGPT or OpenAI, it's just going to copy your company and make it better. So the only way you can do that, the only way you can really compete is by creating your own trained AI, which obviously costs a huge amount of compute and a huge amount of data storage. So buying the picks and shovels, i.e. the data storage and the compute power, is a much safer investment. But as we discussed, Amazon Web Services, like, you're also buying into Amazon, which might be, like, is still going to have good growth over the next few years, as well as Nvidia is probably going to have good growth, but they're already at all-time highs. So it's for any potential similarities in the crypto space. Well, he puts forth Filecoin, which is a decentralized data storage platform or protocol. He thinks actually decentralized storage is better for AI because there's no single point of failure, or there's no one who's in control of the data storage. Like, no one can just increase the price or remove access for your AI company, or doesn't like what your AI company is doing. So, but a decentralized storage system, obviously no one is in control of that. So you can store your data on a decentralized server like Filecoin, which is distributed all across the world, and it's going to remain there indefinitely. Like, you just pay once and it remains there forever. So basically what Arthur is saying is that there's not a huge ways to easily invest directly in AI at the moment, but when the AI bubble starts taking off, anything that is even somewhat tangentially related to AI is going to go into a crazy bubble. And obviously Filecoin, there is a narrative there that AI needs compute and it needs data storage. So a decentralized data storage, Filecoin being the biggest one in the crypto market, will obviously benefit greatly from that if that scenario happens. Now personally, there's Filecoin, but there's also its competitor, which is called Arweave, which has a lower market cap and actually has less inflation to come out on the market. So for me, I prefer Arweave just for those reasons. But if the scenario plays out, either one of those coins is probably going to do very well. Now you could also make the argument that a coin like Render, which is decentralized graphics processing, could also benefit from something like this. I've done a video on Render, a full dedicated video on Render if you're interested. But yeah, I think the data storage narrative is better than the graphics processing, because it's not just compute power for AI necessarily, it's more for video graphics. So the biggest money that is ever going to be printed is going to be printed in the next 3 years, and there's people who are still sitting in cash or are still sitting in bonds. So once the train leaves the station, crypto and AI, and any coins or projects that have ties in crypto and AI are obviously going to do extraordinarily well in the next coming bubble. With maybe it's not a bubble, it will just go into a next bull run. But nevertheless, very interesting thoughts from Arthur Hayes. I will probably buy a little bit of ROE personally for the next bull run. So thank you so much for watching. I really appreciate it. Smash the like button if you did enjoy the video. I'll leave a link to the article and the interview with Arthur Hayes in the description. Thanks again. See ya.